Hello traders, this is day number 30 of small cap market open trading. I have written a plan specifically to day trade small cap stocks, which are notoriously volatile and unreliable, but also extremely popular to trade by new traders. They're also responsible for blowing up a lot of new traders' accounts. So my idea is to have a plan that can be traded safely by new traders especially, allow you to take 100 trades or more without risking a huge portion of your account, and hopefully making you profitable. If you watched my video from yesterday, you know we're about 40% into this test, and so far we are up 10R. So we're extremely profitable at this point. We didn't start out that way. The first couple of weeks were unprofitable. I didn't change one single thing in the trading plan. I just continued to trade it the exact same way. And now we are up 10R. And that's just the power of statistics and the law of large numbers. If you have something that has a probability of working out around 40% of the time, there's definitely periods where you could have 9 or 10 trades that are red in a row even. So you have to trade for a very long time to find out if you're profitable. So we only need a 33% win rate to break even. So if we're getting a 40%, or I think we're at 41% now, win rate, we are extremely profitable. So let's take a look at the screener first, and I'll show you today's trade was a little bit different than usual, and I'll explain everything in detail. So this is my small cap screener. Always click those 3 little dots and click modify, otherwise the filters will not be applied. Then I organize the list by volume, and I'm only interested in the stocks on the first page because I want to see the stocks trading with the most volume, so I never scroll down. And then I'm looking for stocks with a percent change of 5% or more. But on the chart, there's a lot of chart criteria that must be met. So just because something has like 30% doesn't mean that I automatically jump into a trade with it. So AUTL is a perfect example, did not meet my chart criteria. And that's all written in very specific terms in my trading plan. So let's take a look at the video, and you'll see me go through. There was a lot of stocks on the screener that I had to sift through. And the nice thing is my trading plan tells me which ones to keep on the chart page and which ones to reject. At one point, we will shut down. I don't know if I hit something. I haven't had this happen, I don't think ever, but it just shut down. Could have been my computer, I don't know. And I had to restart it. So that's why you see all of these charts disappear. And then I'm kind of starting over here. So GEVO, this is the one that gave me the first entry opportunity. There was no other stocks out of all those stocks that I was looking at that was triggering any entries. So the first yellow line is the high of the previous session. That could be the pre-market, the aftermarket, the previous day, whichever is higher. I must see that level broken. That is the first sign that there is strength in the stock, but that's not enough to take an entry. Then the high of day is established. It happened to be established on the same candle that broke through the previous high. And then there was a pullback. So now I'm waiting for the second high of day to be established, and that's what this white line is out there for. And I think when I placed it, the second high of day wasn't quite there, or maybe coincidentally it was just a cent lower at that moment. But I just throw that out there to remind myself, hey, I can't take a trade until the price hits that level or establishes that level and then pulls back. So it went 1 cent higher, 7.75. Now I'm waiting for a pullback and a 1 minute candle to make a new high to give me an entry. So this first candle, this first green candle here after that high, second high of day, is a pullback because it has a lower high. So even if this candle broke out above it, I would have to take that entry according to my plan. It's not what happened, but it's similar. We did have a red candle right after, and then this candle broke out. I was looking for 773, and then you could see it went right to 774, and I hit my hotkeys and got in. So 1 cent slippage, generally not a big deal. If you've been watching my recent recaps, you know that a lot of these trades I've been taking have been going to 3, 4, 5, even 10R last week on one specific trade. So getting a cent or two of slippage is not something to worry about. And then you can see this thing is like taking off, so I need to get my profit target in place. The most important thing, as always, is to have the stop loss in place. So get that in place first, then worry about the profit target, because if the trade reverses on you, flushes down, you don't want to take a bigger loss than you need to. So, all right, so now we're in the trade. I've got my stop loss, my profit target out. Everything's taken care of. I don't have to worry about anything. I don't have to judge the trade. The only thing I do have to do is go back and make sure that I executed the trade properly. So you'll see me throw out a couple lines here, and I'll explain what those are. So right here, this blue line, this signifies an entry that I should have taken or could have taken and didn't see when I took the original trade. So this double top here represents a area where I could have entered, because as I said, my plan says that after a second high of day is established, which would be right here on this candle, that if the following candle is a pullback, and I even consider a double top a pullback, that I would have to get in on the first 1 minute candle to make a new high. So my ideal entry would have actually been here at 772. My stop loss, interestingly enough, would have been in the exact same place, because it would have had to be below this candle. So it would have been the same stop loss but a lower entry. That means my profit target would have been lower. So it's a lower risk trade, a higher probability of working out. And there's the level that I needed to get hit on that ideal entry, 782, in order to make a 2-hour trade. Now, if that happens, my plan says to stop trading for the rest of the day if I get stopped out. So if this target gets hit but I get stopped out and my profit target doesn't get hit, I have to stop trading for the day. So you can see it went up to 785, 3 cents shy of my profit target. I think it goes even to 786. There it goes. A bunch of times. It's just bouncing off that 786 level. And I'm only 2 cents away. And yes, it's tempting to break your plan and move that profit target in place, but you're not going to be a green trader. You're not going to be profitable long term if you get in the habit of doing things like that and breaking your plan. My longest green streak was 13 days. That sounds wonderful, but it was the result of breaking my plan. So guess what happened on the 14th day? I wiped out all of those gains and I ended up red over the long run. And that just happened time and time again. There would be these great green streaks and then I would wipe out all the gains. Why? Because I had no discipline. I didn't really have a good plan in place, and whatever plan I did have in place, I wouldn't follow it. I would break it on a regular basis. So this trade is a great example of being able to follow your plan, being able to stay disciplined even when it's not easy, right? This is not easy to let the price come up 2 cents shy of your profit target and not move your profit target down, but that would be a break of my plan. That would be a break of my rules, and we've already talked about what happens when you do that. So now the price comes down. Let's see, there was one other thing that I noticed is, well, not really that I noticed, but another line that I placed on the chart was, what if I would have gotten that 773 entry, which seems like it probably would be impossible because the way the price moved there, but that was my ideal entry because the high of these candles was 772. So I also have to mark that out on the chart. If the profit target based on that 773 entry gets hit, that's another reason to stop trading. So let's see what happens here. Excuse me. So now we have 2 green lines, and so that represents the profit target had I gotten my ideal 773 entry, and you can see that they both have been hit. So there's no question that what I must do if I get stopped out is stop trading, because there's already been 2-hour trades that happened without me. So that's just a fault of, like, an error in my trading, because obviously I missed this trade entry opportunity. So if that trade works out, then I have to stop trading because I missed a good 2-hour trade. So let's see what happens. So stop loss gets hit, and I already put a note up here to remind myself that if that happens, to stop trading. And you can see I stopped the video there because that was the end of the trade day for me. So I'd rather take a -1 loss for the day than break my plan or try and revenge trade because I messed up over here and this thing gave me a 2-hour trade, but I didn't get it. Let me jump back in. I don't know. Maybe this thing reversed at this point and did give a 2-hour or 3-hour or 4-hour trade, but that's not part of my plan to do that. My plan says that if I screw up and I miss a 2-hour trade on the ticker symbol that I'm trying to trade, that I have to stop trading if my stop loss gets hit. So obviously if that profit target I had out would have gotten hit, it would be great because I would have kind of screwed up, but I still would have made a 2-hour trade, but that's just not what happened. So here I'm walking away -1 We're still extremely profitable on this plan. If you watched yesterday's video, you know all about that. So this is a great example of when you have to follow your plan, even when it's hard to do that. So if I can continue to do that in the long run, I know I'll be green no matter what. So as always, go into every single trade with a plan and stick to that plan even when it's really hard to do. and then always take your stop losses, honor your profit target, and in the long run, you should be green. Take care.